All right, welcome back, everybody. The top of the hour, 1 p.m. on the East Coast, and we've got a sell-off ensuing here at the corner of Wall and Broad. But here's what's weird about it. You have two competing inflationary issues. One, the wholesale inflation report, which was starkly strong, up 0.6%. Then you have oil collapsing well into a bear market that scared the you-know-what out of foreign markets, particularly in Asia, where they've already seen $4.3 trillion worth of value just evaporate. They've never come back as much as our markets have come back. We're still down a net around $1.5 to $2 trillion by comparison. But those fighting allegiances are letting some people wonder, all right, the weakening oil prices is going to mean that we're going to look at cheaper oil, cheaper heating oil, cheaper gas. So that's more money to play with in the Christmas shopping season for consumers to offset the higher effects of tariffs and trade and all of that. But the other issue is that almost everything else has been going up in that environment, which, of course, is leading to the higher wholesale inflation figures, which, of course, have been weighing on financials, weighing on a host of other retailers, and you name it, most of the Dow components. So it's like a weird kind of course of events. Let's get an idea where we go from here to Kingsview Asset Management CIO Scott Martin, Walzer Wealth Management President Rebecca Walzer, and Cadena Group President Gary B. Smith. So, Gary, ending with you on this, is it your sense that the oil thing is a positive thing? Because there are a couple of ways to read that, since oil is disproportionately weighted in the Dow and the S&P, that when that feels the hit, those investors feel the hit.
I think it's definitely positive. And, as you said in your opening remarks, the cost of doing business across the board, whether you're a consumer or a business, has just gone down. You talked about, and obviously gas, oil price are a big part of that CPI number. You mentioned everything else going up. Here's the difference, is that you can't switch from gas to something else very easily, maybe electric cars, I suppose. But with all the other things in the basket, the retail goods, it's very easy for people to switch. If the price of beef goes up, they switch to pork or chicken, something like that. I think this is very much a net positive for the U.S.
Rebecca, how do you feel about this?
Yeah, I mean, of course, I'm excited for the eventual prospects of independence global, of global oil. So I'm excited about this. Yeah, the PPI was obviously very high, and that does indicate, it goes along with the Fed's sentiments yesterday that they're on a hawkish bent and expect rates to go up, and that's why we're seeing the global pullback, obviously. But I'm actually encouraged with the Iranian sanctions and everything with the oil prices. This way, I do think it does bode well for shoppers at Christmas time.
That's interesting. Scott, let me be the old fogey here then and say, could this be stagflation then, or the earliest signs of it, where oil and maybe its collapse is a sign that the global economy is slowing, just as inflationary pressures beyond oil are building in this country? What do you think?
Yeah, global economy potentially, Neil. U.S. economy probably not so much. And to the point that Rebecca made earlier, gosh, guys, seeing oil actually react to the fact that the United States is now the world's largest crude oil provider is great. And the fact that we may actually, my goodness, have an actual oil policy in this country for the first time since I was, prom king is really encouraging for the consumer as we come up to Christmas. Yeah, it's true. And so the reality is this is really good long-term, maybe difficult short-term to the market to react to or digest. But gosh, overall, look at, Neil, you talked about this in your opening salvo. Look at the influence that oil alone has in things, say, like raw material costs, sure, which we hear about in company earnings reports that were such a headwind over the last several quarters. Now those are going to come down. That's going to help with company outlooks, help with company profits, and I think continue to support the S&P 500 at some point.
Yesterday, Gary, I was talking to the former head of the CFTC, the Commodity Futures Trading Commission, and saying that, don't be fooled by a downdraft in some of those commodities, that some have been very stubborn. I think he was referring to tin and platinum, palladium, all of that stuff that could show, the earliest signs of a sort of like a commodity-based inflationary spiral. Didn't think it's happening now, doesn't think it's imminent, but worth noting. As a technician, do you note that kind of stuff or what?
I do. Just a couple comments. Scott's been waiting 7-8 years to throw in that prom king comment. Boy, I don't know how we finally slid it in there.
I thought that was brilliant.
Talk about a humble
part.
brag for crying out loud.
And all
Second
that
of
does
all,
is remind me of all the girls who turned me down for the prom before my mother's.
Hey, I
my
like
mother
those
said
too, Neil.
yes,
It doesn't always mean you'll
right.
get dates.
I know.
But yeah, I mean, that would, yeah, I mean, as the economy, not only our economy, but as the global economy continues to grow, there's going to definitely be more pressure on those other commodities that are not easily replaced, tin, aluminum, things like that. One other quick thought on your stagflation. I just don't see it, and here's the reason why. We have too many exciting new technologies about to come on board en masse. Robotics, self-driving cars, 5G wireless that I think are going to continue to be a real boom, create new industries in the U.S.
Rebecca, what do you tell investors now? They've seen so much volatility in October, a little bit of stability returning in November, but the year could end, with huge gyrations. What do you tell them? And if they're concerned about just wanting to get through this year without having their heads handed to them?
Yeah. Well, of course, I think it always goes to where they are in their investment cycle. A 20, 30, 40-year-old, the advice is if we have a substantial decrease, which I don't think we're going to, but if we did, those people, their advice is this is a long-term play. It always is. But for those people that are really close to retirement and their main portfolio is their 401k, if we were to start on a large spiral downward, obviously that we would have to look at other options for those kinds of people.
So for those, let's say, maybe a year or two older than 40, what do you tell them? I mean, they then have to be much more cognizant of the volatile period and be very conservative. And if they are conservative, where would they put their money, or where do you think they should be?
I mean, the thing is, Neil, if you just look at 2008, you can see that it took 4.5 years for someone who lost and participated in the full market downswing to get back to whole. So for those people that are very close to retirement, have 10 years or less, we can't really deal with a 5-year, swing like that. So obviously they're going to go to short-term, treasury bills, something that's going to be a market or a cash equivalent that's going to be safe and not that's going to, obviously we're going to have to hold it for a while until we see a recovery and we can buy back in.
Scott, what do you make of technology? It's trying to claw its way back, but every time it does, Apple gets another downgrade, or someone is saying, Apple is going to be stumbling, or then Amazon, can't seem to retrench here. What do you tell them?
Yeah, speaking of past dates and love lost, it certainly feels, Neil, like tech's not getting a lot of love these days. That's for sure.
Didn't you? Go ahead.
I had to. Hey, you and me both, man. We're kindred spirits here. And I'll throw Gary B in there too, maybe. But here's the thing. On days like today, gosh, Neil, look across the tech landscape. Stuff is getting smoked. You look at Apple, you look at Netflix, you look at Adobe. A lot of these companies, Broadcom, they're all getting hammered. And, it just goes to show you, I think it's more of a temporary psychological thing where the market is reacting very tough to tech stocks because those have been the leaders. They've had a great run for the last 3 years, and it's about time for those to come in, but they're going to come to a valuation level, as I think you and Rebecca just noted, where it's going to be an attractive reentry, and that's what I believe investors should be watching for.
Do you guys look at any of the political noise, the Mueller probe that might or might not be wrapping up within a matter of weeks? Rebecca,
Yes.
You're shaking your head. Why?
Yes, because I think obviously investors like a divided house in Congress, so they got some positive news. But absolutely, Neil, we've got some major political things that potentially will happen these next 2 years before 2020 re-election or non-re-election of Donald Trump.
Enough to move stocks to the point that you want to get out of the way, or what?
I'm not saying that. I'm saying be watchful, be very watchful, be like a
Volatility.
hawk. Yes, exactly.
Gary, what do you think of that?
Maybe I'm like you, maybe an old curmudgeon. I've kind of seen all these things.
No, I never said I was
come
an
and
old
go
curmudgeon.
before. Well,
that was implied.
I think I am the oldest here, right here. So I could say I'm the oldest curmudgeon, I suppose. But all this political stuff, I think to me, and I think to anyone that's not playing inside baseball, it's just white noise out there. They've seen that. You couldn't even ask the average person out there what probe is ongoing right now. All they care about is do they have a job, the value of their home, are their wages going up. I think all those are positive, and I think the market just starts to tune this stuff out. I know I am.
Interesting. All right, guys, I want to thank you. Poor Rebecca's saying, how did I get hooked up with these losers?
Exactly.
I'm kidding. Thanks, guys, very much. Have a wonderful weekend. Well, the president has apparently got